Farhad, I think a useful place to start is with this concept of private wealth as it applies to an alternatives asset manager like Blackstone. I remember years and years and years ago, your boss's boss's boss, Steve Schwartzman, of course, was one of the very first people to advocate for this idea that quote-unquote retail money, it's not real retail money, but it functions as a useful term, needed to be allowed to invest in alternative solutions. Here we are today. How important is PWS, Private Wealth Solutions, to Blackstone relative to its other historic clients, institutions, for example, and sovereigns?
And Erik, thanks. Thanks for having me, and thanks for the question. Look, you're right. Steve really saw the potential of retail investments quite early. And when we look at our experience over time, today, a quarter of our assets under management come from retail channels. It is
we're talking about
$270 billion.
Right.
And I would say to the firm, and frankly for me personally, this is incredibly important. So we have been so fortunate over time. Some of the biggest, most sophisticated institutions around the world have backed us in different ways, and they've stayed with us in many ways. But the idea that individuals can have access to the same things these big, sophisticated institutions and extraordinarily wealthy people have had, actually, I think is really important. And for the firm, I mean, the institutional area continues to grow, but the potential on the retail side for raising assets is massive. And when we think of individual allocations to private markets, they're still really, really, really low. And so the opportunity to grow and scale this, I think, is tremendous, and it's going to be really important to the firm. We've built this group. We're now 330 people, probably 450 by next year, to really cover globally, what we think is the private wealth opportunity. And so we create new products. We now have a whole suite of products across real estate, private equity, infrastructure, and credit. We distribute it in different ways globally. We think education is a really, really important aspect of this. What are you buying? How are you buying it? What do these underlying portfolios look like? But also there's the basics of giving the customer a good experience.
You're here in Doha, not only because you were dying to appear here with me on stage, but mostly because you're here to do business. Tell us about Blackstone's ambitions in private wealth for this region.
Sure. I mean, for anybody who's here from the outside for a conference like this, I mean, the energy and the opportunity is absolutely extraordinary. We're here today, or I'm here this week, not only for this amazing forum, but to meet with a number of partners. We always work with local partners to distribute different solutions of ours. And we think the opportunity on the ground is amazing. We see it in a number of places. A number of our international partners have local offices in places like Dubai, here in Qatar, and in Abu Dhabi. But what's also more interesting for us, the number of onshore banks that are here, that are interested in these sort of solutions over time is super compelling. Earlier today, just here at the forum, we signed a memorandum of understanding with Doha Bank to create a partnership for them to distribute our products in Qatar.
And that's how it works for the most part, right?
Yes.
You don't deal with these clients the way you deal with other LPs. You have partners who function as intermediaries.
Absolutely, and the partners are everything from some of the largest banks in the world to local financial advisors. So there's a lot of different partners, but no, we don't deal with the end investor.
Give us a sense of scope and scale. The GCC, broadly speaking, accounts, if you can tell us, for what percentage of Blackstone's retail assets today, and is it growing at the same pace as the accumulation of retail assets elsewhere in the world, or at a faster clip?
So I think we're still in early innings here. It's relatively small in the region. We probably have raised around $3 billion to date. But the opportunity, I think we're at a really interesting inflection point, and our team here has done a fantastic job building relations. But the opportunity to scale tremendously, I think, is extraordinary here.
What makes private wealth as a pool of capital here different from private wealth as a pool of capital, say in some of your more traditional markets, such as the US or Western Europe?
You know, Eric, I don't know how different it is. Maybe it gets
I mean, do they want different things?
No, so that's what's interesting to me. So maybe you explain it, or I use the word wrap it differently. But I think whether you're in the US or Japan, Canada, Australia, all these markets, I think the end investors want the same thing. And when I talk to people and we talk to these partners, what are you looking for your clients over time? I find the message to be pretty consistent around the world.
You mentioned earlier that in private wealth solutions, you now have a broad range of products. What do people want most right now? What are people most interested in? Where do they want to take risks?
I think it depends on the profile of the investor. As you know, we have these 4 products now. There's been tremendous interest in credit recently. We've seen that around the world. But we've just launched an infrastructure fund in January. There's tremendous interest in that. And I think it depends on the profile of the investor and what are they looking for. Are they looking for income? Are they looking for growth? And I think there's something to be said over time for certain types of investors to actually have a whole suite of products that sort of satisfy different needs.
I can think of some ways in which private wealth behaves differently than other kinds of capital you raise. But maybe you can articulate it. You know, a pension fund is a certain kind of client for Blackstone. Again, we're talking about wealthy families for the most part, and there are many more of them than there are pension funds. But what are some of the different characteristics of private wealth capital versus, say, more institutional or sovereign capital?
I mean, I think so when we think of private wealth capital, you talk about wealthy families. I mean, I think the real goal is to widen the aperture as much as possible of the wealth bases of people, from super wealthy to mass affluent. And when you're dealing with so many people, many of whom have not invested in private markets before, I think what's really, really important is the educational component. What this is, what you're buying, what it means over time. And that can range from the super basic, like, who's Blackstone? What does private credit mean? Like, how does this product work? But if you don't get the education right, one, that's wrong, because you have to be transparent. You have to explain to people what they're buying. But there is a tremendous need to invest on the educational side. And even when you're dealing with the most sophisticated distributors in between, only we can tell our story. And so we take tremendous time where people, not only from the private wealth team, but from all our investing businesses, sit down with these partners. Hey, this is the latest we're seeing in infrastructure. This is a theme we're playing. This is how we're doing it. So the constant cycle of education is probably one of the most important things, or differences.
Well, what do you find them responsive to then? You said there was a lot of interest in private credit. Are they interested in private credit because they're responding to some of the, as it were, the education that you're offering them? You know, how private credit is different from public credit, for example.
There are secular trends in the economy that make people interested in more or less one thing versus the other. But I do think the education is important because actually it's sometimes not even people reallocating, it's people who've never been in these markets before. So you're trying to actually broaden the base of people investing in these type of products.
I think the point that you made about education and transparency is critical, and I'm going to make reference to something that some people in the room may recall. About 3 years ago, there was some controversy around the liquidity available to private wealth clients in a couple of Blackstone products, BREIT and BCRED specifically. What did the firm learn from that, and how have you translated that experience into the way that you explain what these products are and the risks that you need people to be mindful of when they are investing in private markets versus public markets?
I mean, we designed our perpetual products to be semi-liquid. And one of the reasons we did that is, as investors, some of our best opportunities have been in times where people are forced to sell. And what we said was, we don't want to be
greedy when others are fearful.
And we don't want to be in a position where we are forced to sell, which is at a disadvantage for the investors who are remaining in. And so what did we learn? Constant communication, constant availability of ourselves, transparency, explaining the portfolio. And when we go out and we meet people today and we talk about BREIT, rather than abandoning us, rather than hiding the shadows, you were upfront, you were available, you explained things, you walked us through things, and so it's that constant multiple touch points that's mission critical.
Can you expand more broadly on Blackstone's business here in the Gulf region and perhaps a bit about where it sees things going here from an asset management standpoint, from a fundraising standpoint, and maybe look a little bit further into the future in terms of what the firm's ambitions are in this part of the world?
Sure. I mean, as you know, the firm has had deep relationships in the region for a really, really long time. And some of the largest institutional players throughout the Gulf have been amazing supporters and partners of our business for a really long time. I touched on the fundraising side.
We could name a few of them, can we not? They're kind of public.
You can name a few of them if you like. Everybody, the leading funds in Abu Dhabi, in Saudi, here in Qatar, they've all been supporters, and it's both broad and deep. I've touched on how we think we can expand in retail channels. One of the things that we've been looking at, we invest around the world, and we've been looking at markets here and trying to understand what the opportunities here might be within the region. What I'd say more broadly is, which I touched on earlier, is when you look at the type of development, the institutionalization that's occurring here, these become more and more compelling markets to look at in different ways.
Are you, whether it's in PWS or more broadly across the firm and its businesses, are you scaling up in this region? Of the 330 people you mentioned earlier who work for Private Wealth Solutions, how many of those are here, and are you hiring?
So it's a really good question, and we're really at an inflection point. My instinct is we will be, and we're really thinking through the plan. And I think you'll see over time more and more boots on the ground here.
And why is that? Is that because, I think we're all fairly cognizant of the sort of the push me, pull you aspect to this, which is, the pull you is, I want Blackstone, whether it's Blackstone, whether it's Goldman Sachs, whether it's Citigroup, whether it's Amundi, it doesn't really matter. I want you to show me that you're committed to my region by opening an office and hiring local talent and training those people. And the push you is, I actually see talent here that I want to take advantage of, whether it's homegrown talent or whether it's talent that was imported but decided to stay. Which of the two is it?
We've always had an office in the region. We have fantastic people on the ground here. And on the private wealth side, the way to do this really well is you need individuals to cover the institutions. You have to do that locally on the ground. That's the way you do it. And so to scale up, you're going to have to scale that up more. You
came out of real estate.
I did.
Why did they put you in PWS? What's your story?
Look, I grew up in our real estate business. I've been at the firm for a long time. And the private wealth business has been growing, tremendously. And as we think about scaling up the business, taking resources from different parts of the firm to think about that scaling up is something Blackstone's always done. We've seeded different, sometimes new businesses, sometimes more mature businesses with people from within the system. I've worked in the US, I've worked in London, I've spent a lot of time in Asia, and I think because of our global ambitions and where we're headed, I think the firm thought it was interesting to have somebody with my background in the seat.
And what specifically are your responsibilities as COO?
Look, I running the day-to-day operations of the group.
Which means?
We have tremendous ambitions to grow, right? And thinking very, very clearly, what is that bridge to growth? Do we need new products? Do we need to approach products differently? How do we distribute? On the ground in this area, if we want to grow more, do we need 2 people? Do we need 10 people? How do we think of that? How do we plug in, like in the US, we have 260,000 individual and investors. Scale that up to 1 million people. What should the size of the business look like? So it's a whole range of things.
Because you've been the chairman of Europe, I want you to put on your geopolitical macro hat for a moment,
Sure.
and let's talk about some of the things that form the bedrock of so many of the conversations that are taking place here at the Qatar Economic Forum. From a Blackstone standpoint, firm-wide, how does it feel with respect to the impact of tariffs and these other big U.S. policy shifts we've seen over the past 4 months? And how specifically are they playing out for alternative asset classes?
Look,
that's a big question.
Yeah, it's a big question, and a lot of people, frankly, much smarter than me, have been speaking about tariffs for the last day and a half, and I think there's been, a bunch of very interesting commentary. What I can comment on are sort of facts on the ground. As we know, policies have been rolled out, but we haven't seen the full impact yet. What has it done? Look, business likes certainty. This is uncertain, and people are waiting, and that's starting to factor into the economy. Where this really goes, honestly, I don't think we know. We work very, very closely with our portfolio companies to see impact and how to mitigate impact, and we think we have a strong handle on it. But I think we're all looking for some certainty here.
Uncertainty is a barrier to liquidity, and a barrier to liquidity is a barrier to transactions. To what degree do you personally, or does the firm worry that the longer this uncertainty persists, the longer we won't see transaction volume, and the lack of transaction volume is an issue, or as it were, a problem for Blackstone, both going in and getting out?
Uncertainty for us on the investing side has always created opportunities. And different parts of the business, yes, it's in terms of new opportunities, slowed in certain sectors, but in other ways, so for example, real estate, particularly in Europe, there's been some really interesting activity. They haven't been through larger companies, they've been more granular, smaller deals, but people need liquidity, and when you have it, it creates opportunity for people like us.
Having spent as much time in Europe as you have, what, about 15 years?
20.
20 years. You know well that people have been waiting, Europeans, and for that matter, investors globally, have been waiting for Europe to wake up out of its, call it, slumber. All of a sudden, that seems to be happening. Larry Fink, the CEO of BlackRock, a competitor in many respects to Blackstone, joked recently that every capital in Europe should build a statue to Donald Trump, right? Because he's actually done for Europe what so many other leaders in Europe have failed to do, which is to awaken these animal spirits. This pivot to self-reliance that Europe appears to be trying to make, whether it's self-reliance in terms of weaning itself off of the US consumer, or self-reliance in terms of weaning itself off, or at least losing access to the US security blanket, how big a deal is this from your point of view, and what kinds of longer-term changes does it portend?
I mean, where you open is the pessimism for Europe, particularly by Europeans. We've heard it for a very, very long time.
A malaise, right?
Sorry?
It's a malaise.
Yeah, there's this real sense, and there have been real structural issues. We know about the politics, we know about the regulatory, so we've seen things. But for us, and if I gave a Blackstone view, from an investment perspective, it's a really interesting moment.
Inflection point?
I don't know if the word is it could be inflection point, it could be somewhere along the spectrum. All the issues that people talk about in Europe, people are deeply aware of, and they are we see them being addressed in different ways, and we see something different going on in the economy. So as a general matter, as you know, ECB's probably cut rates 7 times, Bank of England 4 times. So you're in a declining rate environment, which is helpful in some ways. When you look at the balance sheets of a bunch of these countries, sovereign debt to GDP, you look at savings, there are a whole bunch of factors where actually at deficits, there are some healthy signs in these economies. And now when there is a pivot, and we're seeing it, and Germany is going to be the engine of this, to investing into something like this, and I actually think the change in Germany could be really transformational, the way they're talking about it is. I think there's some tremendous opportunities there. And at the end of the day, let's not forget, it's super wealthy, it's super educated, the technologies are really strong. So I think it's a really interesting moment to be looking at it and maybe having a different view.
Farhad, I hope everyone here agrees with me that we achieved a lot in this conversation, but I think our single biggest achievement, ladies and gentlemen, is that you had 2 Canadian kids here on stage, neither of whom cracked a hockey joke. Farhad Karim of Blackstone.